Okay, what's up, guys? It's been a while since I made a video. Sorry about that. Over the past, 5 months, a lot has happened, and I've been developing a lot of new kind of interesting strategies, especially when it comes to understanding microcap manipulation and kind of really trying to optimize on like what setups produce like a big fade, right? Because the type of trader I am is I'm always going for entries at key reversal patterns, reversal signals that produce some type of big fade, right? So my videos are much more focused on like catching fades that might take an hour or 2 hours, usually on low decreasing volume after like the morning action is played out. I'm not really going for quick scalps, right? So I want to talk about a strategy that is probably my newest strategy. I'm going to make more videos on kind of other strats that I trade, but this hopefully should give you an idea of what is happening in the microcap market and what a manipulator is thinking and what they're doing and what they're planning on doing, and how you can read it like in real time, right? So this video is about what I would call bid propping. So bid propping, for those of you who don't know, so on the level 2, you have the bid and the ask, right? And the bid is the people looking to buy, and the ask is the people looking to sell, right? And bid propping really means like somebody is coming in and they're giving support to the stock, right? So if somebody here, say at this point right here, at this candle right here, there'll be a bid at like 5.98, and there'll be an ask at like 5.99 or 6.0, right? But the bid's the lower price, they push it up, and then there's a higher bid, right? There's a bid at 6.03, right? And they push it up, and then there's a bid at 6.14. So like somebody is pushing up the bid, and he's not letting the stock fall down, because on this type of trade, so imagine it's the morning, right? So this is APTO from 3/24/2021, so March 24th. Get a big push, right? It starts trading 2 million volume per minute. This is the 1 minute chart. If you're wondering what all these lines are, I know it looks like a lot for people who are kind of new to my videos, but the purple line is the 9 exponential moving average. Very important on big, strong pushes, as you see here, following it perfectly. As you see here, following it perfectly. There's the 1 minute 20. So exponential moving averages depend on what time frame you're using. If you change to like say a 5 minute, you're going to get different lines in different areas, right? So back to the 1 minute. 1 minute 20, which is the green line. Super important as support, as you see, pushes on the 1 minute 9, falls to the 1 minute 20, pushes on the 1 minute 9, falls to the 1 minute 20, pushes on the 1 minute 9, and then there's some type of trend break, right? Blue line is VWAP. This is the 50 moving average, and this is the 200, the white line. Okay, so we're not gonna. This video is not really about moving averages, but in case you're wondering what those are, so out of the gate, $6 a share. This is trading 2 million shares a minute, right? So when a stock starts trading 2 million shares a minute, breaking pre-market highs, a lot of pullbacks are traps, pure short traps. You see this all the time on stocks pushing 1 million, especially stocks pushing 2 million shares a minute. You can't just trust like, oh, big red candle, I'm going to short. Can't do that. Like, you're going to get squeezed if you're going to be shorting in this consolidation. I'm going to risk high a day. That's why this candle exists. This candle exists because somebody is squeezing all these shorts who are building up their positions. And look at this. Look at the push at high volume, and then suddenly it gives a big crack, and the volume becomes like, look at that. That's like 30% of what it was. They know a lot of shorts are looking at this volume and like, oh, the demand is dying, dude. This looks so weak. This went from trading 2.5 million to 600,000. Wow, that is a 60-70% decrease. This thing is going to give a few weak pushes and just crack and fade. Man, I'm just going to load up on my short. I'm going to risk high a day. They know that. They all know that. Anyone who's manipulating this stock knows that. And the reason like why 2 million shares a minute is so dangerous is because not only is there a lot of demand from retail, but it also means that somebody can absorb a massive amount of the tradable float, which is how many shares are actually being traded on that market during that day. Somebody could come in and start accumulating tons and tons and tons and tons and tons of stock because they know there's so much retail interest that they could provide bid support, usually along some type of key, MA or VWAP, and then just keep squeezing it, keep squeezing it. So like, you can't just trust initial pullbacks. Even if you see this big red candle, right? If I wanted to short after this candle, this would have had to push, consolidated near the highs, not down here, near the highs for like 10 minutes, give one final push, and then crack on the highest volume of the day. Instead, this consolidated for what, 4 minutes, and then cracked on like the same volume that was traded before. That simply just means this is a very natural sell-off, right? They're just selling off what they accumulated down here, and then they're reaccumulating down at the bid, down at the 1 minute 20 to push and squeeze shorts. So like, this is, if anything, the longer I see this happen, the consolidation down here happen, the more of a long it is. It becomes a great early morning, high volume, long situation. Pushes, comes back, instant crazy reclaim. Once you see something, because I know the 1 minute 20 is super strong support. Once I see it bounce directly to it, an instant reclaim all in the same 1 minute candle, I'm like, oh, it's just still insanely strong. Like, there's no reason to short this down here. Okay, so it gives a big push, then the volume starts thinning, it starts grinding down. Some people like to short into this. In my mind, I still think it's still trappy. There's still plenty of times where it can consolidate, push, consolidate, fake, like make a new low in this range and then rip faces. Like, happens all the time. But whenever I see like grindy, slow, grindy, this is just grindy, grind. Like, I don't like this. Like, I don't like shorting into this. I don't like shorting into these pops. I know it faded here, but there's plenty of times where it doesn't, right? And then it gives this big, insane wash candle, right? See this big red candle that's bigger than all these other candles? It's like, okay, maybe backside's in. I can risk just above VWAP, unless I start seeing a manipulation pattern that shows that they might be targeting a VWAP type of VWAP stop loss. But yeah, you get this crack, and then it starts fading, kind of very slow. Volume's massively decreasing, right? Kind of bounces, comes to this white line. So this white line is the 1 minute 200, which for me is always a price target. And the reason it's always a price target for at least partials, at least if I'm shorting, say I shorted after this crack, which a lot of times I'm fine doing if it's a gigantic fucking candle, I don't mind shorting into this crack. Especially the fact that there's no bounce after this crack is just confirmation that like this stock's quite weak, right? I can trust the low volume here because of how big this red candle was straight through VWAP. But I'm always taking profits 1 minute 200 because I know during midday manipulations, which is anything after like 10, 10, 15, 10, 30, anything in like that late morning, early afternoon time frame, the 1 minute 200 is extremely manipulated. You can track this. Track the stocks that push, come back in the middle of the day, and then push again. 1 minute 200 is super common support. If somebody's looking to manipulate this further, they're going to be using the 1 minute 200 to start accumulating stock, right? So the fact that it comes here, and then very interestingly, 5.8 was support, breaks 5.8, instant, decent volume reclaim, it starts going back up, super dangerous. You never want to see, especially at the 1 minute 200, solid support forming, having it break support, and then instant resoak, instant reclaim. It's a big, like, to the point where if this just comes back up, if I shorted down here, I'm getting out completely getting out, because I've seen this happen over and over and over again. But the point of this pattern is a lot of times I have to explain the context, because patterns often depend on the action that came before it, right? So a lot of times the basics of this pattern is that there was a huge push in the morning. There's a pretty deep fade, say 7.2 all the way to 5.8. That's a pretty deep fade, well under VWAP, right? Losing volume. You're talking about 3 million shares traded per minute in the morning, all the way down to like 200, 300K, right? And then you start getting this like grind up. You see the very manipulated support break reclaim, and then you get a pullback, push. You start getting this higher low, higher high, higher low, higher high. And what's interesting about this is if a manipulator is actually looking to squeeze it past high a day, this isn't the pattern that happens. In order to squeeze past high a day, what the manipulator actually needs to do is A, not let the stock fall this far, but B, he has to set like higher lows. Like it's really the only way to do it. So it has to be high low here, higher low here, higher low here, higher low here. So it's progressively higher lows, and then there's a big squeeze. And the reason why that happens is because as you get higher lows, lower highs, lower highs, lower highs, lower highs, not higher lows, lower highs, you get a bunch of stop losses. You get a bunch of people risking this. You get a bunch of people risking this, risking this, risking this, risking this. And then they start accumulating, and then there's a big squeeze. And that's because there's so much volume traded in the early morning, they have to set a huge trap of progressive short stop losses to generate enough volume to squeeze past all these back holders to reach new highs, right? However, if you're doing this, there's no lower high trap for short sellers to generate enough liquidity to squeeze past high day. This is a pure long trap. This is making people think the stock is strong. Oh, stock's strong. Stock is strong. Stock is strong. Higher lows, higher highs, right? Trend lines. Oh man, this is going to trend all the way to high a day and squeeze. As you'll see in these other examples, never happens. especially if the volume of this higher low, higher light trend is lower than the volume that generated the push to begin with. This is almost universally just trapping longs. They're trapping longs, trapping longs, trapping longs. Question is, it's kind of hard to determine where to short. Because what you could do is you could take starters. You could take little tiny positions and add, once it gets to like a decent level, once it gets to like more than halfway up, you can start taking little starters because like the odds of it coming back down are just so low. Or you could just wait for the trend break, right? Which is usually what I just do. I remember this was the day that Trade Zero actually lost its internet connection, so I couldn't trade this, which was quite annoying. But what can you do, right? Get a new broker, I guess. But yeah, you get this higher lows, higher highs. You get a trend break, and usually that is the signal that the guy who's manipulating this has filled his short. He sold all of his shares, filled his short, and now he's just in control, and he's just gonna take this down. He's just gonna take this down. He's gonna keep unloading. He's gonna unload into any bounces. He's just in complete control of the stock, and it just fades really, really hard. You get a big crack here, and then you get some really low volume choppy action in the afternoon, which kind of sucks. Like, of course, you kind of wish that this fades even further, preferably to the 5-minute 200, which is a great price target. But sometimes you don't get it, and you try to catch as much of the move as you can. But yeah, the general pattern here is big push, big pullback. Usually intraday. I'll show you a pre-market example. But usually intraday, big push, big volume. I'm talking like millions of shares if possible, 2 million, 3 million shares a minute. Big pullback, classic 1-minute 200 midday manipulation MA. That slow grind up, and they just fade back down. Other examples that happened very recently, ENVB, literally the same exact thing. Tons of short traps on this, especially early morning. Again, you got your crazy 4 million share volume. You got your pullback. Seems really weak, right? This traded 4 million shares. Now it's trading 800,000. Seems weak, right? It's under VWAP, right? It's rejecting VWAP, right? Does your one push above VWAP? Huge clear out candle. It's pushing all the way up, comes all the way back down below VWAP. Now I would love to see this candle fall below this support, have this push up here and come like all the way down below 5. That would be an amazing short. That'd be so weak. However, you get something really interesting. You get like this clear out candle. So clear out is like people are risking, like, for example, like 5.75, or they're risking this little high, they're risking like they're shorting below VWAP, risking in this area, right? And this is a little pop above VWAP, trigger all those stop losses, and then big, decent, not super huge, but decent sized red candle. And I think I remember shorting this with small size. I'm like, well, maybe it'll fade. But then you get instant 2 green candles right above VWAP, and I'm like, okay, it's time to get out. like the thing about big, nasty, what I call clear out candles like this is that there should be almost no bounce. If we go back to the example we were just looking at, you got the huge dump with no bounce, right? This should just mean the seller is in control. He's just selling and selling and selling and selling and selling. Like, and there's no chance of, like, if there was 2 green candles, if this dump happened and there was a green candle, like 2 green candles on the 1 minute chart that broke VWAP, then that'd be a sign to get out. I'm like, okay, like the seller isn't in control, right? There shouldn't be just 2 instant green candles after a huge dump on relatively low volume, right? But if we go back to ENVB, that's exactly what we get, right? We get a huge dump and then 2 low volume green candles. Shouldn't happen at all. Like, if anything, it's a great long sign. It's a great sign that like this that this is a trap. This guy's not selling. The sellers aren't in control. And he's just setting it up for a squeeze, right? So, and this is like a pretty, these are 2 decent size. That's a 40 cent reclaim on 2 low volume green candles. So anyways, you get a bunch of choppy, super trappy action. And then you get the $7 break. Actually, I would love to see this actually break $7 because people love having their stop loss at like 7.01, 7.02. But it doesn't matter. We get a decent size, another clear out. There's kind of this range at 6.95, clears out that range, hits 7, and then massive dump, right? Usually decent, not a bad short to take. Again, I would like to see it clear 7, and I would like to see this candle be a little bigger. Like, this candle was still smaller than these candles that pushed up. I would love to see this be like a $6 million crazy candle. That'd be ideal, but not bad, right? So you get a decent bearish signal that at least there's going to be some type of fade. So we get a pullback, doesn't quite come to the 1 minute 200, but it pulls well below VWAP and it loses a lot of volume. And then we get the same pattern. There's some type of support. You see, we get like a big break of support here, instant soak, pushes back up. Always hate when you see support be broken by a few cents and instant soak, instant push. Always be wary of when that happens. Comes back up, forms a lower high, and then squeezes past VWAP. And I'm like, this is not what I would consider normal fading behavior. This is somebody setting a trap. What type of trap are they setting? Are they going for a high a day? Are they going for this high? Somebody's accumulating. They're going to take out some stop loss. I don't know which stop losses are taken out, but they're going to take out some stop losses here, maybe some stop losses here, maybe some stop losses here. Maybe. I don't know. But I knew though this fell pretty far, in that the volume is much lower than what pushed. So I'm like, okay, maybe it's the bid prop. Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Just this trend, right? I'm like, okay, the longer this trend lasts and the slower it happens, like, they're not sending the short traps they need to send. They need to set in order to squeeze past 7. This uniform grind up is super trappy for longs, because retail longs see tons of strength in this. They see tons of it. They're like, oh man, just like it's following the trend. It's gonna break this. It's gonna squeeze to 8 and 9 and 10. Doesn't happen. Never happens that way. Study the charts that end up squeezing at 12 o'clock, 1 o'clock, 2 o'clock. They never look like this. As you'll see from other examples, they never look like this. And then you got that grind up, and then huge trend break right here. Big candle, big red candle trend break. And look at that. No bounce, right? You get short right here. The fact that there's no bounce in the first 2, 3, 4 minutes shows you sellers kind of in control, right? Like, there's a lot of people selling. The guy who accumulated this and is probably building a short position is selling. Other short sellers are selling. Longs who are freaking out are selling. There's just so much selling, right? And And then you just get a very choppy fade, but this is on very high volume stocks that were trading, 3 million, 4 million shares. A lot of times you just get choppy fades like this, but it faded pretty far. It did end up reaching the 5-minute 200 almost right at the end of the day. This is why it's often good just to keep holding until in case there's like a last minute crack. I've seen it happen many times. Yeah, your entry again. You could build starters on these pushes if you can recognize the pattern. Usually, I wouldn't start building it too early. I'd wait. This is one of those patterns you want to wait for a decent amount of accumulation and pushing to occur. And trust me, like these uniform grind ups never break high day, especially if the volume is lower than initial push. It's very rare. There's also other examples of this that happen on like shorter time frames. So here's ears. In the morning, just did your what I call the repeated high. Does a first high, pulls back, traps shorts, second high, pulls back, third high. It's actually great if this third high breaks high a day, but it didn't, but it's okay. It came pretty close. Came within like 10 cents. So did this, came really close to high a day. Volume started topping out. It pulled back, volume decrease, hard crack, volume keeps decreasing, right? So this is like, there's some backside in this. Now the question is it just going to keep fading? Or is it going to find support at some key level, maybe the 1-minute 200, maybe somewhere below VWAP? But sometimes it doesn't happen. This grind up doesn't happen for nearly as long. Like this maybe lasted like 45 minutes. The other two examples lasted like an hour and a half. But it's the same idea. It's the same idea that there's a big push. It pulled back really deep, usually well below VWAP, a lot of times at a 1-minute 200. The volume decreases, but then you start getting this like higher low, higher low, higher high, higher high, higher low, higher high, higher low, higher. Well, this was close, but not. Still, you get this candle here, higher high, higher low. Starts like, okay, is it going to go again? Is it going to go to 5.8? Like, I don't know. Falls below VWAP, hits the 1-minute 9, falls below VWAP, and then hard crack. Like, it's always hard to tell. It's always hard to tell. Like, this is an example where like building a startup position on like this high might be worth doing. Or if you see the 1-minute 9 be rejected and it goes even lower, like it might be worth building a small position. It's hard. This is a harder situation to. It's not as easy to read as the first two, but it is an example of a higher high, higher low grind up after a big push. And of course, ears, just like eyes, was like super manipulated, so you get all this crazy choppy whatever action. But you can catch a piece of it. SEAC, this was some super recently. So this is an example of big push out of the gate, and you get this amazing, get all this choppiness, don't short this shit. Wait for the clear signals of short, which is you have this 1.75 kind of resistance being set up, and then breaks this 1.75, makes new highs, huge, massive red candle. Great, like these are your ideal shorts. These are the shorts where it's like something consolidates in a range, especially early morning, pushes right above it, and hard breaks, dude, on the biggest volume candle of the day. These are the shorts you could go 4x normal size, 5x normal size. These are just like those like A+ signals. I'm like, okay, this dude was trapping a bunch of shorts who are risking high day. He was trapping a bunch of longs who thought this was going to break out. He broke the high a day by a few cents, triggered all the stop losses, got a bunch of longs to chase, and then he just dumped literally 3.3 million shares. Well, that's not all him, but he just dumped a massive amount of shares into all those stop losses and all those breakout buyers. And the sellers, and then you get immediate no bounce, immediate hard crack, immediate hard. This is just like, dude, like this is these are the moments you wait for in terms of sizing big size. And then what do we get? We get a fade, minimal bounces, volume's decreasing, great to see. Hard crack to the 1 minute 200. Look at this. And then there's a bounce. A lot of times there's a bounce on a 1 minute 200 because so many institutional traders, so many algos, so many retail traders trade off the 1 minute 200. They know the 200 EMA is it's like VWAP. So many people use it, therefore it's useful, right? Like a lot of technical indicators are self-fulfilling prophecies, right? If enough people use them, it has an effect on price. So it comes down here, you get this soaking action, but volume's still low. But I'm like, okay, if volume is this low, if you start, this is 180,000 shares at 1.4, like they should maybe make like one bounce, maybe a second bounce at the most, and then fade, right? You get, if you ever study Elliott wave theory, there's like first wave up, second wave up, crack, right? Rarely do you get more than 2 bounces. However, you do get the crack. Cool. Instant fucking nasty high green, high volume green candle reclaim. And it's like, oh, the fade is over. Like the fade's over. Like this fade's over. Like this is a long signal. Now the question is, even if you go long here, what's your target? Is your target high day? Well, this traded an insane amount of shares in the morning. This fell all the way to 1 minute 200. I know about the bid prop strategy. I know bid prop strategy usually doesn't reach high days. So maybe I go long here and then, I take some profits above VWAP. And if it cracks below it, I take it out. The reason I wanted to pick this example was this example of big push, huge pullback, higher lows, higher highs, higher highs, higher lows, higher highs. And then it cracks. And you usually think, oh, cool, it's gonna unwind just like the other patterns. I remember shorting this too. I'm like, okay, cool. You're going to see a nasty unwind like we always see. And, we get this big crack, huge volume. That's what we like to see. No bounce. That's what we like to see. Gives one little mini push above this 1.5 range, huge crack, cool. They should fade. They should reject. And actually now the 1 minute 200 should become resistance. You should bounce up here, then reject it. Instead, what do we get right here? We get a huge crack, and then what's this? Zero volume pushing up, zero volume pushing up, zero volume pushing. If an all-day fade is going to happen, there shouldn't be a zero volume reclaim. These candles right here should not exist. And I mentioned this on my Twitter. This entire crack shouldn't be reclaimed, which was huge. This crack was huge on huge volume. Shouldn't be reclaimed on no volume, right? By no means. It's just like this. After this huge crack, there shouldn't be much of a bounce. There could be a tiny bounce, but like there shouldn't be, especially above the 1 minute 9. There shouldn't be really bounce above the 1 minute 9. And you should see a ton of selling. You should see decreased volume, and you should see big cracks, right? Instead, we get the exact opposite here. We get low volume, instant reclaim of this entire range. And this, I remember actually practicing my longs, right? Because for the longest time, I would only short. And then I would see this manipulation, and then I would get out. And then I would just sit there. I'm like, oh yeah, this is going to trap a bunch of shorts. I'm going to get out. But now I'm actually like, wait, why don't I try to go long on these manipulations? But a big thing with me is I always believe that you should never trade with big size for something that you're new to, right? In fact, you should need a significant sample size before you of success, of consistent trading success before you start using bigger size on something you're learning. And that includes all these things I'm teaching you. Like for the longest time, like my longs, I do 100 shares. I'll go 100 shares at 1.4, which is like nowadays for me, because I'm consistently profitable, shorting is laughable, right? It's 100 shares. It's essentially paper trading without me having to have a paper trading, because I don't have a paper trading account. I just think it's annoying to have 2 accounts and 2 different windows and all this stuff. So it's essentially paper trading. Just I can use my actual brokerage account and actual money, right? So it's also very easy for me to scale. But it's one of those things where it's like, even if I make money on this long, and I did, I went long down here, covered my short, went long down here, and then I thought it would be actually a repeat of this pattern, and I took all my profits over here. I should have recognized that this was like an all-day manipulation and that they were going to break high a day and push higher. But that's why I practice longs. What's nice about practicing the other sides of trades, and keep in mind, I did only shorts for like 2+ years. You get to see what an ideal long is and what your price target should be. And that actually makes you a better short seller too, because it allows you to recognize, well, like, what are ideal long signals? Like, this is a great long signal right here. It shows you somebody's in control of the stock. And it tells you when you should cover. You can short 1.5, take some profits on this crack, and then take the rest out. And now, you made like 1-2% of your short, but it's better than getting squeezed in the afternoon and losing, 8% or 10%. And then you could even flip long, and then you can catch a part of this move or even a big part of it, So that's really the benefit of studying both sides of things and really getting into the details and really, tracking these patterns just makes you a better trader. Also, it reduces the reliance on having everything needs to fade really hard, and then you're paying borrowing fees for all these shares you have to borrow, and then like, well, I hope my short profits are enough to make up for my borrowing fees. But if you're going long and you could, consistently make money going long, suddenly, maybe borrowing fees used to eat into 20% of your profits, but now they only eat until 5 or 10% because now you're able to make enough money going long where even if your short fails, now you can catch the other side of things and things work out. Of course, the reason I keep it at 100 shares is I make a lot of mistakes. Sometimes I think maybe where I'm setting my risk is the wrong place to set my risk. Maybe I'm reading the situation wrong. There's plenty of longs from the month of March where I won 100 shares and then I lost. I lost, maybe 20 cents a share on 100 shares, and I lost $20. And I'm like, okay, that was worth doing than trying to start my longs with 1,000 shares or 2,000 shares or 5,000 shares. I'd rather lose $20 than lose 200 or $2,000. That's for sure. And then just by the way, little tip: anytime I tried sizing up early, let's say I get 3 of these long plays in a row, and I go, man, I just won 3 times in a row on these long manipulations. Man, I should try sizing up, dude. Why am I doing 100 shares? The moment I size up, that's when I lose. Because 3 trades or 5 trades or 10 trades isn't enough. Like 50 trades is enough. 100 trades, like that's what I want, right? Because there's so many different situations and different contexts. But I did want to show you that how strong the 1 minute 200 can be. Look at this: cracks it, instant reclaim, bounce directly off it. Like, guys, like, look how precise that is. Look at these candles. Look at these wicks, man. Look at these wicks. Like, this is not a coincidence, guys. Like, the 1 minute 200 is heavily used in midday manipulations. And then, you just get this grindy, high volume. Like, what's interesting about this, I remember watching this. I actually didn't short this because I think I was just done for the day. And sometimes I just watch the market. And I'm like, I'm done for the day, but I'm going to keep an eye on the market. You got this. And I was like, maybe I was kind of hoping for we would get like, do you see this white candle? This broke this high a day. I was kind of hoping we would get a white candle and a huge crack all the way down here. If that happened, I would have totally traded it. I would have, like, even though I said I was done for the day, if something crazy ideal happened, I would trade it. But instead, I saw this huge red candle right here. And I'm like, well, it didn't really break the high a day, but it is a huge red candle. I was like, you know what? Since it didn't break high a day, I'm not going to trade it. I'm perfectly happy just watching things because at least, some people might view it as, well, maybe I would have made money there. But I view it as, well, maybe I would lose money here. So, and if I say I'm done for the day, I have to see something that's so ideal that like would make me want to come back. And this is kind of like, man, like they just dumped it right here. That's so interesting. I'm like, oh, maybe if there's a weak bounce, maybe I'll trade it. Like, again, if you ever see a massive dump candle, they should give maybe one little push like this and then struggle to break like where it closed. Or even like where it opened, it's like 1.77. Like it should struggle really crazy super hard here and then fade. What do we get instead? We either crack insane green candle. Like, what is this? I remember looking at my level 2, and this popped up from 1.75 to 1.85 in a millisecond. It didn't even take out the offers. It was almost like the offers for the entire 10 cents disappeared, and it just teleported. It literally teleported, and I was like, I said in a private Discord chat with my friends, I was like, that was the most inorganic thing I've ever, like, well, maybe not ever. I've seen some crazy shit happen, but like, it's super inorganic. Like, where did all those offers go? How did this teleport 10 cents in a millisecond? And as soon as I saw that, I'm like, oh, this is not fading at all. It doesn't matter how big this red candle is. This is this is a signal. Like, if you got down here, get out. Just get out. Get out. Take your 8-cent loss and just get the fuck out. Don't wait for a pullback. You know, maybe wait for the next candle, but just get out, dude. This is just super manipulated. If anything, this was a long and either sell at high day or wait for like a big after hours push. But you know, that's kind of its own pattern you need to study. Okay, to finish this video. Oh yeah, just to show you, this was an example of when this pattern doesn't keep fading and further manipulation happens. Okay, that was the point. The final example is when this happens in the pre-market, which is not often. This is more of an intraday pattern, but here's an example of something happening in the pre-market. So OVID is interesting. It's a larger, it's still a microcap, but it's like a slightly larger market cap, higher institutional ownership stock, which is usually not the best. You get a lot of like choppy action. You get a lot of bid support. You get a lot of like stuff like this. Like high institutional ownership stocks have a lot of like, they do fade. They can fade, especially with a ton of dilution or really, really bearish patterns. But they tend to be a little choppy. They tend to like not like, you don't get like a lot of times you don't get like deep nasty fades on them, but you could trade them. My kind of rule of thumb with higher market cap, so anything over like 100 million, especially over 200 million, anything with like institutional ownership, which I use Whale Wisdom. This tracks 13F holders, which 13F is what hedge funds and kind of like big funds like that have to file every quarter. They have to file like what positions they're holding and how much. So this is why you have like Q4 2020, right? That's the most recent quarter as of right now. 43% IO, pretty high. Anything over like 30% is pretty high. You could trade it, but I do like to wait for like a really nice technical pattern that kind of tell me that like the seller's in control. Yeah, this is a high IO, but like this tends to produce fades even with high IOs. Crazy parabolic. Pulls back. I don't think I shorted any of this. I think I was just, actually, I don't think I traded this at all. I think this was an example of when I was kind of first developing the strat, and also the high market cap, high IO. I was like, well, you know, a lot of times these find support down here, push back up. And honestly, it kind of creates, by the way, when I study pre-market action, I like to not include the intraday because the volume from the intraday skews the volume from pre-market. So I do like to just look at the pre-market. That way I get to see what this volume kind of looked like. Weird enough, like this was the biggest green candle in the pre-market. Usually this big green candle would be at high day, but instead it was like over here. But okay, whatever. High day is right at 6. Breaks it, stalls, gives one final push, and then fades. I'm like, okay, that's pretty weak, right? Broke high day, broke 6, wicked for a couple minutes, and now it's coming back down. Again, I don't really like this slow, grindy action. Ideally, I wanted to see break 6 and then crack all in one candle. I want to see this candle come all the way down here, all in 1 minute. But sometimes you don't get that. You get something that's like not as ideal. So you can go in, but got to go in smaller, tighter risk. Got to kind of look at, I'm looking at the IO and the market cap. I'm like, okay, I'm probably not going to go super big size on this anyways. But I'm pretty sure I didn't trade this. I was just looking at it. I thought it was interesting. So it comes below VWAP, volume starts going a little bit down. And you start to get this bid support, right? Again, bid support. They're propping a bid. Here, here, here. And you're constantly clearing out VWAP, bringing it back down. Clearing out VWAP, bringing it back down. which is why all these candles are the biggest candles. These candles, these candles, these candles. They're constantly like, because shorts love the short under VWAP and risk right above it. So, and longs love the chase when it breaks VWAP. So VWAP is super important, just like the 1 minute 200, super important. Bid prop, but look how long this lasts. 806 to 906. This is an hour of constant bid propping. They're holding it up, but they're not pushing it. Right. The way to do this would be to push it, bring it back, lower high, big squeeze, right? Not this super tight grind up action with the bid prop. This is, again, just like all the other charts, like this is not how, especially over this long period of time. The longer this happens, the better this works. Even though there are like periods I showed you before where there's times where it can happen for, 10, 15 minutes and work. But I do recommend if you ever see this type of thing, just record it. I have my own chart file that I won't share. The main reason is because the way you learn how to do things is you record it yourself. You have to notice it in real time yourself. Be like, oh, this is the pattern that's happening. At the end of the day, when the stock market's close, you take a screenshot, you go to your own file, your own MS Word file, you copy and paste that screenshot, and you do that for hundreds and hundreds of charts on the same pattern. And then that's how you learn that. Like, the truth is, even if I shared with you all my chart files and all my Excel files, it would actually have almost no effect on your trading, almost none. It's only when you do the work yourself, you recognize patterns yourself, use things that I talk about, use things that people like Trade the Matrix or All Day Faders talks about, use that as a foundation, but then build your own data sets, build your own chart files, try to recognize things in real time on your own, right? That's really how you improve. And then you'll develop your own understanding. Maybe you'll be the type of person who's like, has your own way of how to determine where to enter, where to exit, what's really bearish, what's really bullish, what type of signals are you looking for on the chart, what type of signals are you looking for on the level 2 and on the tape, and how do you view things like institutional ownership or market caps or floats or dilution, and like you have your own way of looking at things. And then what's cool about that is you become less reliant on other people, right? It builds self-reliance, which is really important. It's really, really important to build. You want to kind of escape other people. I was going to make another video on this, kind of like the journey of how a day trader develops. I might make that today, actually. And a big thing people start with is like chat rooms and Discord and paid DVDs and all that type of stuff. And I always say that your goal should be to escape that stuff. But even when studying me, your goal should still be to like escape my explanations, right? like the end goal should be like, you shouldn't need my videos anymore. It's cool to learn from other people. It's cool to keep tabs. I still follow the people I learned the most from, and I still like reading their tweets and seeing what content they put out. And if Trade the Matrix comes out with a new article, I love to read it. If ADF tweets something, I love to read it. I keep tabs on it, but I no longer feel like overly reliant on those people, right? Where in the beginning, they're introducing concepts I never heard about, and I was over-reliant because I just had no context for what they were explaining to me. But over a certain time, you develop your own context, right? You develop your own way of looking at things, and then suddenly you don't need to DM them a million questions anymore. You don't need to constantly feel that like there's no way I could do this on my own, right? And that really just comes from hard work and having a systemized way of tracking things and studying things and understanding things. And then just come up with your own answers that make sense, and then test them in the market, in real life, and take notes on what you were thinking and how you're executing, and did you read the situation right, and what are some possible weaknesses, and how you're kind of attacking the situation, and how can you improve, and really that's the way. That is really the way to go about becoming better at trading. So anyways, big prop, kind of have this trend, right? And then a lot of times what happens with this bid prop is you get one more push, and then you get like this very low volume. Sorry, I gotta go to this. Oops. See how this candle's fucking everything up? You kind of get this low volume where like they can't really push it anymore, man. They're still supporting the bid, but a lot of times what's happening here is they're actually just filling their short. They're selling a massive amount of shares and they're filling their short. And that's why finally when they pull the bid support, big red candle, bigger red candle, bigger. This is an unload, dude. This is the bid prop is done. Longs are freaking out. Everyone who thought this high day breakout was coming is slowly, every passing minute and passing second is realizing that it's not going to happen. And that's why you get the selling. And again, like when the sellers are really in control, look how it's not like it breaks and then there's a bounce towards VWAP. When the sellers are really in control, you can't wait for like, oh, I'll wait, like, okay, it's at 5.13. I'll wait for like a 5.2 bounce, but like, guys, the most bearish patterns that fade the hardest don't get bounces. They don't get fucking like that's why intraday. Right? Of course, you can't do this in a pre-market, but intraday, I am shorting at the market. I am removing liquidity. I have market hot buttons. I pretty much short at the market exclusively anyways, unless the stock's on SSR, just because I hate putting my order on the ask and waiting for it to get filled. If I want to be in a short intraday, I want to be in it, and I'm going to short at the market. That's just how I do it. And luckily, US Trade Zero, not international Trade Zero, but US Trade Zero is free commissions on shorting at the market, so I don't have to worry about paying commissions and all that shit. So pretty good. But yeah, you do get a fade, but again, it's really common for these high IO stocks that find some support. Look at that insane soaking. Oh yeah, here's an example. 5.2, right? Here's a support, bounces back up. Oh, sorry, 4.2. 4.2 is really strong support, breaks it by 2 cents, instant reclaim. This is a sign, if I was short from over here, I'm like, oh, they might be squeezing it. Like this is like a long signal, but the things with long signals is you never quite know where they're squeezing it to. Are they going for VWAP? Are they going for this range? Are they going to VWAP? Are they going for high day? You never quite know. In this case, they just went for this range, which is like this intraday high day. And then big volume, instantly pulled it back, and then eventually you got like a fade, a very slow, choppy fade. I'm not agree. So yeah, and that's just that. So that's an example of the bid prop in terms of something in the pre-market. But yeah, it usually happens intraday. So, but keep an eye out. You never know. But again, basic premise: big push, pullback usually well below VWAP, lower volume, and then this slow grind up. Which eventually there's some type. It's nice if there's a clear signal like this, where it's just big red candles breaking the trend. That's always the best. It's even best if it pushes and then there's a big red candle, like a clear out then red candle. That's even better. Sometimes it's easier to read than others, but and the easier it is to read, the more ideal the situation, the more confidence you can have, and the bigger you can go on your initial position, which is always great. So, all right, hope that helped. See you.